Welcome to the channel, guys. My name is Jess. So the results from the most recent federal interest rate decision has finally come out, and it looks like the US is facing yet another pause. With the rest of 2025's economic climate still relatively uncertain, we need to talk about the effects of these rates on Bitcoin, including potential macro tops and sell the news events. We'll also dive into the short-term and high time frame charts and price action to talk about the positioning of the market right now and what that means for the future. Let's get into it. As always, before we dive in, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Tuesday, Thursday, and Sunday, and sign up to my free Telegram for more regular Bitcoin updates. If you're a trader and you're interested in joining my VIP trading channel, be sure to message me down below on Telegram. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. Alrighty guys, so diving into the charts and the recent price action, let's really quickly talk about the most recent federal interest rate decision. Honestly, there isn't too much to say. It came out at 4 a.m. this morning for those of us in Australia, and it was, as expected, another stagnation, right? We're sitting at, once again, 4.25 to 4.5%. Now, keep in mind, we only have about 3 more interest rate decisions for the rest of 2025. If we take a look at CME FedWatch, we've got one on the 17th of September, 29th of October, and then the 10th of December, and that is it. And we still have the general narrative that throughout 2025, at some point, we were supposed to get 2 rate cuts or 2 25 basis point cuts, leading to an overall reduction to about 3.5% by the end of 2025. And with only 3 more rate decisions remaining, it's sort of becoming a little bit of that crunch time, and a little bit uncertain, to be honest, whether or not it's actually going to happen. Now, this is really interesting because throughout the last year of price action, ever since the last rate cut in September 2025, the market has still been rallying despite the economic conditions, right? We take a look at this green box over here. This was the last time that we had rate cuts, and it was a 50 basis point cut caused by sort of a really strongly diminishing job market all the way back here in September. It was like a little bit of a panic cut, and it was quite an aggressive one, right? 50 basis points. And it also, if we take a look at the price action here, is what eventually led to the breakout of this large period of consolidation from Bitcoin all the way from March to 2024 to September 2024, right? This was sort of the period of consolidation we were seeing in 2024 that marked out that wait and see in regards to rate cuts, right? So the moment we got that cut, we saw essentially an immediate reversal where we pushed above that resistance there and have since rallied a lot. The market has been really busy since September 2024. We've created 3 new all-time highs, first of all at 110, 112, and most recently at 124. And it sort of begs the question whether or not these most final 3 rate cuts are going to mark the top, as the price action has clearly priced in future rate cuts for 2025, right? Or if they're going to invalidate the 4-year cycle by causing rallies after the 6th of October. Now, we've already heard from Jerome Powell or the Fed themselves that the probability of seeing a rate cut in September is already pretty low. I mean, they're always vague and ambiguous, but they've said we haven't made any decisions about December at this time. They're still waiting for the data and, the classic spiel that we've been getting every single rate meeting for the last year, essentially. But that approach overall is relatively more conservative than what we heard in July, this current rate meeting, or before this current rate meeting, where we were specifically told not to rule out a potential cut, right? So the fact that we're expecting still 2 more quarter point cuts over the rest of 2025, but unlikely to see one in September, leads us to believe that most likely, or more likely than not, if we're going to see any rate cuts, it's going to be on the 29th of October or the 10th of December. And both of those dates directly conflict with the 4-year cycle, which has a top prediction date of the 6th of October. Because inherently, rate cuts have generally been bullish for the risk asset market, right? As we see the cost of debt decrease, inherent risk in the market decrease as well, and therefore money rotates into risk assets such as Bitcoin, altcoins, and S&P 500. But that would suggest, if we get rate cuts after October, that the market will continue rallying after the date range trend prediction for the 2025 top. And otherwise, if we do continue to respect this, that means that the rate cuts that we keep waiting for are going to be seldom news events, potentially resulting in corrections, maybe 5 to 10% in October at the first rate cut, and another 5-10% in December. And potentially that could lead to the development of a high time frame segment of bearish price action, as we have seen in the past. And really what all of that shapes up to tell us then is that what we need to rely on or look at the most and pay the most respect to or attention to in terms of moving forward and predicting those potential top signals is the actual price action itself, right? Because while we are at resistance, there is always a potential that we're going to develop a top. While we're at resistance, there is a potential that's going to be the final level of resistance and will end up breaking down from support. And that will lead to the eventual correction that we keep talking about when we talk about this top. And so I guess all that information sums up to tell us that the closer we get to the 4-year cycle top and these sort of interest rate decisions in September, October, and December, the closer we get to those periods, the more inherently risky the price action becomes for Bitcoin. Right? And while we might see another rally on the short term or another new all-time high for the time being before we reach those dates, it becomes more likely that the resistances that we create in those subsequent rallies are going to be those final resistances, the ones that we cannot break above, and that signal a local top, and that develops eventually into a higher time frame correction. So with that in mind, let's finally dive into the price action and talk about what resistances we're looking at right now, what structures are developing, and what is going on in the price action. Now, if we go ahead and take a look at the higher time frame price action, specifically the weekly and the daily chart, we can see that there has been a fair bit of weakness developing for Bitcoin, right? We have a clear weekly high over here at 119.3 thousand and a clear level of support at $17,000, which thus far we seem to be holding. And the issue arises when we take a look at the RSI. So despite the fact that in this weekly candle close over here, Bitcoin printed the first higher high on the RSI since all the way back here on the 26th of Feb 2024. We have, in this most recent weekly candle close over here, this green candle, created yet another instance of bearish divergence once again. Now, bearish divergence on a high time frame is generally a big deal because there has never been a macro top where we haven't had an instance of bearish divergence on the weekly time frame. It tends to pop up right as those sort of massive macro weaknesses start to develop, and then it generally marks out the reversal. So we're seeing that once again. We have this high, higher than I guess the prior one. We have a higher high forming on the price action and a lower high here on the RSI as well. And we also failed to, despite tapping 124,000, break out of this larger downtrend that we have in the RSI, showing the decreasing momentum ever since February 2024 when we tapped $74,000. And taking a look in the daily time frame, it's a similar sort of narrative, right? We have clear levels of horizontal resistance and support, being once again $117,000 to $120,000, and consistent decreasing momentum. Now, the silver lining in all of this price action is, while support is support, it's going to continue to facilitate bullish price action. So until we break down from these levels, all this momentum downtrend tells us is that the selling pressure is increasing, but at support, we're seeing that the buyers are successfully defending that level. There is still demand for Bitcoin at these lower levels, and that's why on the daily time frame we continue to see these large wicks and yet candle closes above $17,000. And no matter how much momentum continues to decrease, as long as we continue to see that support actively defended, there is a potential here for this consolidation or this sort of stagnation in the price action to lead to an eventual breakout. And so that leads us to talk about then the opposite scenario, right? So we have these sort of warning signs developing, but we're still at support, right? There is a potential for a continued rally beyond $124,000 leading into October. So let's take a look at the shorter time frame price action and the triggers for that potential rally. So diving into the short time frame, we can see clearly our level of support, our deviation low at 15,000, and our level of resistance ranging from 19.6 to $120.7 thousand. This range high marked out by this high right there. And then of course our all-time high, or the next target essentially, at 124,000. And on the short time frame, we can see we have been consolidating in a bullish structure. We have a descending channel with currently 5 retests of the channel, 3 on the top side, 2 on the bottom side. And the measured move for the channel takes Bitcoin beyond the all-time high currently and to somewhere between $123,000 to $125,000. This depends entirely on the breakout point, right? If we break out later on in the channel, the measured move is going to be to a lower price point as we've descended further. And if we break out aggressively sometime in the near couple of days, we might see a rally up to 125,000. So all this to essentially say that while the federal interest rate decisions are becoming more and more muddy to work through in terms of predicting what the effects are going to be for the rest of 2025, including conflicting information with date range trends in the 4-year cycle, what we still have on the short time frame and even on the high time frames is that despite signs of weakness, Bitcoin is still holding support and there is still potential for a final rally. Whether or not that takes us to October before we see the top, or the actual interest rate decisions end up becoming bullish events and we end up seeing further rallying beyond the 4-year cycle, is another question. And that's something, once again, as I said, we have to look at the price action at that point in time to figure out. Alrighty guys, that is a wrap on today's analysis. Thank you for tuning in for another episode. If you enjoyed it or you learned something, don't forget to smash that like button and subscribe to the channel to get regular Bitcoin analysis every Tuesday, Thursday, and Sunday. And sign up to my free Telegram for more regular Bitcoin updates. If you're a trader and you're interested in joining my VIP trading channel, be sure to message me down below on Telegram. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And sign up down below to beat you next to get 15% off your trading fees as well. I'll catch you guys in the next one. Bye.